As everyone anticipates a black swan to cause a crisis, one is going on before our very eyes. You came here for the truth. Today, I've got a big one for you. A lot of information, a lot of detail. And the first thing I want to cover is what pertains to you, and that is the Fed's inflation. I'm going to look at what they said, what they've done, and of course, how this relates to you in the economy as a whole. All of that will connect into the next part, which is insiders selling. This is so key to understand because the insiders are always aware of what happens before the general public. You see that actually in the price action of the stocks. And of course, we have seen it historically as well. The third thing I want to look at is the ups and the downs, because some things are up, some things are down. And of course, you need to know what that all is and what it means to you. Let's begin. So let's begin right now by taking a look at this Wall Street Journal article. The latest strong inflation report strengthens the case for the Federal Reserve officials to agree next week to accelerate the wind down of their stimulus efforts, clearing the way for them to potentially lift interest rates in the spring. Are they going to do it? Well, we'll see. But right now, if you look at the H41 of the Federal Reserve, if you literally go to a search engine and type in Fed H41, you will get the documentation and it shows you their actions, where the money has gone to and from, at least what's public. Consumer prices rose 6.8%. That means inflation, according to their metric, which we absolutely know is manipulated to be pushed down. And we will talk about that more in this episode. But all I have to show you is that despite all of that, they're still rocketing higher. This is a 39-year high. Excluding volatile food and energy categories, so-called core inflation rose 4.9%. Despite their best efforts, still can't get inflation to look like it's lower. Fed officials have said they expected prices to remain elevated over a few months, particularly after energy prices rose this fall. The risk of higher inflation has increased. And we saw Jerome Powell, what he said. Yes, the used car and truck prices. We know about that, the supply chains and the ships and so on. Here we have what it means to you. Balance sheets of households and nonprofit organizations. You could look at this over the last little while. Up, and up. We did experience a dip in the first quarter of 2020, but it has been way up since that period of time. And you can look at that growth. Let's just say the assets, for instance, right upon the 2020 first quarter. Let's take that. Assets, $127 trillion. Now, $163 trillion. Have your assets accelerated to this degree? Has the general public, better question, has the general public's assets gone to this level? No, that's not the case. In fact, if you look at the Federal Reserve.gov website, which I'm on right now, they will highlight some important information here. And you can go back. If I zoom out, I don't want to take too much time, but essentially go backwards here. And, you'll have to do this on your own because, you can go through a lot. Changes in net worth, non-financial debt. All the links will be in the description as always, okay? But you can just see it for yourself to look at the average person and what they have dealt with, okay? What they've been dealing with, what they've been seeing over the past few years, and it's quite shocking, at least to some. Consumer price index, you could see how it has accelerated to a level that is quite high. Comparison all the way back to the 1980s, and you look at this. But I wanted to note a couple things right here really quickly, okay? So we see that it has gone up basically in a straight line. At the same time, the general trend over these years has been down. We know that, we see that. But there have been other periods where it has accelerated to a great degree. Did it stay there forever? No, of course not. But look at this, from the 80s into the 90s, it went from, let's say about 1.5% to maybe 6%, something like this, okay? And that was just in a few years. Now, we are seeing it going at a rate like we've never seen before. But the point here is that things can get out of hand faster than we can get control of them. That's the point. It's not as if, you're going to get some notification that's going to come in your inbox and it's going to say, hey, just wanted to tell you, you might want to do this, this, and this. No, it doesn't work like that. You can take the advice of one person or another, but ultimately it is upon you. You got to take it upon yourself to actually make the changes to your portfolio, to your, the way you live and so on. The backup of container ships waiting to enter the nation's busiest port complex isn't letting up. It has moved further from shore. Oh my goodness. About 30 vessels sat within sight of the ports of Los Angeles and Long Beach this week. More than 60 others destined for the port complex remain in waters farther out to sea. Some hundreds or even thousands of miles away, including ships that reduced their speed during their voyage from Asia to delay their arrival. I mean, how do you make sense of all this, honestly? Then we have this, inflation. Many will talk about how the Federal Reserve is not creating inflation. That is the argument, inflation, deflation, whatever. What I've shown you right now is inflation. That inflation is there. That inflation is happening. You are paying more at the pump. You are paying more for all your goods and services and so on. All of that is documented. Is deflation going to happen at a later date? Absolutely possible. Absolutely possible. Is it going to happen tomorrow? Is it going to happen next year? I don't know. I don't know when it's going to happen. But I can tell you that it is a concern of mine that we could experience deflation. Absolutely. But is it happening now? Not really, no. May it happen in the future? Yeah, I don't know. There's certain people out there who shall remain nameless that say deflation is coming. The bond market is signaling deflation. Okay, great. That would help a lot of people if it meant that asset prices would fall, housing prices would fall. But is that happening right now? No, it's not. We need to be aware of that. What deflation and inflation have for us in the next little while, okay? What about this? We're looking at the social spending framework that could cost $4.1 trillion. What's interesting about this is that I'm pretty sure, I don't follow politics, but I'm pretty sure that this was supposed to be paid for already. All right. So anyway, the point I wanted to make here was, quite frankly, that you can look at inflation as it is understood to be the expansion of the money supply. But when you look at inflation, the amount of money being spent, the debt, the deficits, and so on, showing us here another $4 trillion being pumped into the system. How much money did the government itself spend over the last 2 years? What does that mean for the Federal Reserve and their actions? What are they going to do? How are they going to act? Well, maybe they need to increase interest rates. How far should they increase interest rates? Well, you can see this right here, the Federal Reserve Bank of Atlanta has something called the Taylor Rule. And it describes, the whole definition. They give you the formula. It's really complex. But according to this, you got to look at this and you can actually set the different parameters and so on. But the actual Fed funds rate, which is at 0, as you know, and the Taylor Rule prescriptions, where should it be at to resolve the current conditions of inflation? That's basically what the Taylor Rule suggests. Now we're using, depending on how much inflation and all these different factors. Let's look at it. This is 2021 Q4. Around 5.6 to 6.0 essentially on the Fed funds rate. And that is not even real inflation. That's core CPI inflation that they would need to bring this in to implement a level of 5.6 to 6% on the Fed funds rate. Just imagine where mortgage rates would be right now. Incredible. Switching gears, look at this. Elon Musk and other leaders sell stock at historic levels as the market soars, tax changes loom. Insiders like the Waltons, Mark Zuckerberg, and Google's co-founders have sold $63 billion through November, up 50%. But you look at it even further, and I showed you a video recently that described that there was actually over something like $300 billion worth. Okay? You could look at it all, you can see the data. The whole point is that the insiders are always first. Oh, yes. Elon Musk needed to do this for that, and Zuckerberg needed this and that. I get you. I got you. Don't worry. I'm simply stating the facts. When the smart money says sold to you. Yes. You can see Dan Aykroyd and Eddie Murphy in the background there. But just showing you here, stocks and insider activity. Take a look at the S&P 500. That's the blue line. And the red is the 12-month insider selling buying ratio, increasing to levels we have never seen before. Interesting. Selling at this time. In addition to that, we have insiders, and we have the CEOs, I should say, that are quitting at a record pace as well. Something strange is going on. But you have individuals out there like Cathie Wood that aren't suggesting that they're wrong or incorrect or maybe need to change course a little bit. They're saying that they're soul searching. Yes, soul searching. Soul searching. Okay. Now let's look at the ups and downs. Here you can see inflation broken down. Food, energy, goods, services. Guess what? They're all up. They're all up significantly at this time. CPI, facts versus fiction. If you want to know, the Carson report put this up. Now, the actual, this was actually written back in July of this year, but it is absolutely relevant today. CPI inflation of 2021 is not as high as that of the 70s. False. It is not possible to only compare inflation numbers across several decades because significant changes in the measurement. The CPI of the 70s, including house price inflation, the current measure does not. And they go on. The measurements of then do not add up to the measurements of now. And to some degree, we know that. John Williams, Shadow Stats, breaks it down. But this article gets into it all. And perhaps I could do an entire video about this one article. If you want, though, links in the description. Inflation in one market can be inferred by inflation in another market. False. Accurate price measures can only occur if there's a direct sampling of consumer item or market or a record of actual transactions. The current estimate of owner's rent comes from the tenant market. Okay, and they just go on. The way that they're measuring it is demonstrably false and is false intentionally. Okay, we need to understand that. Speaking of those ups and downs, Manhattan rents see a record surge even with slow office return. Unbelievable. Let me know where you are if you are seeing the rents rising or falling right now. The rent growth, however, statistically, according to Apartment List and the data that they have pulled, has shown basically 0.1% increase this month. So it looks like the growth, not the price, but the growth is tapering off. My friends in Florida, Tampa specifically, inflation tops major U.S. cities at 8% in November from a year ago. Red hot. Florida is absolutely red hot in many, many ways to look at that. So high, sticker shock at U.S. gas pumps as inflation bites. We've seen this before, and unfortunately, they're talking about somebody who said, I can't even fill my gas tank right now. It's hurting so many people, and that is truly unfortunate. There are certain things that we can do. We can try to make change. We can help ourselves. We can work those side jobs if we have the means. We can live with other people who are in the same situation to reduce our costs. We can buy foods in bulk. We can negotiate with our, service providers of all kinds. Did you know that you could simply just call up your provider of your internet and your cell phone and so on, get quotes from other companies and start to negotiate? Many people don't know this, but they should be doing it. I think it is important with anything. Try, just give them a phone call, send them an email, do whatever you have to do, but try and negotiate a better price. Ask to speak to the retentions department. Those are the people that kind of try to keep you there, the loyalty department, whatever they happen to call it, their company. Do whatever it takes. Get your expenses down. Try to bring your income up if you can. And I hope that was informative to you. I'm working out the new studio right here. You can finally see a little bit more of me and the cash flow, the money GPS t-shirts and stuff. So hope you do appreciate all this. I got a new setup going. I'm working on it anyway. I hope you appreciated that. I'm reinvesting the income here. So I hope you do appreciate that. I'm trying to put forth as much effort as possible. If you do, simply hit that thumbs up button. Thank you for that. If you haven't seen this video yet, you definitely want to check it out. So just click it and I'll see you there.